jumping into the GTA market insights, we're looking at all home types. So month over month, we saw a nice little increase of 3.5% on detached, semi-detached, and attached row townhomes. We also saw transaction volume pick up 13.5%, which was a great number to see from the January numbers. New listings were up 9.6%. Days on market fell from 18 to 14 days on market, and termination volume was up just slightly at 1%. And if we're looking at this year over year, so we're down 3.5% year over year from last February. This is the big one here. Sales are down almost 30% year over year. So we're just showing how much of a slowdown we're looking at. And like I said before, this has a lot to do with the impending tariffs from the United States. A lot of people are in limbo. They're just waiting to see how things shake out. Small business confidence is at an all-time low. They don't know where they're going to be spending, if they're going to be laying off. So there's just a lot of limbo in the market right now, and I think that's one of the main drivers we're seeing. A lot of the buyers just sitting back, having a look, wait and see what happens. So year over year, new listings are up 9.3%. Median days on market is up 40%. We went from 10 to 14. And then the amount of terminations was up 57% or 58%. And then just seeing how we've done for January, February this year compared to last year, price is down 2.5%. Transaction volume down 23%. New listings up almost 26%. Median days on market is up 25%, going from 12 to 15, and then terminations are 53.8% on the upside for the amount of terminations, and that's what you're going to get in a market that's struggling. People are putting their properties out on the market at a certain price. If they're not catching any bids, getting any offers, they will readjust their price. Typically they'll terminate it, readjust their price, put it back on the market. When we're looking at active listings, we can see it's the highest active listings we've had since 2011. And we're sitting at 9,539, whereas 2024, so this isn't 2024 right below it. 2024 is down here, where we were at 6,227 active listings in February. So we've come up quite a bit here. We haven't seen numbers this high since around 2013. So it's quite some time since we've seen this amount of active listings. They are going to grow. We're probably going to get up into the 13,000s potentially. So this will be something to keep an eye on to see how closely we follow some of the past years. All right, when we're looking at sales volume, again, this is the worst year we've had since 2011. We're right down there at 2,459. Last year was 3,509. So we almost had just under 1,000 more sales last year than we did, 50 additional sales last year than we were seeing this year. So sales are off to a really slow start, but again, we've got the Trump factor there to deal with. We don't know how many people are sitting on the sidelines just waiting. I would imagine there's probably 50 or more. So if we can get that thing resolved in early April, we should see more people move off the sidelines. And then when we're looking at the median sale price, we're right there. We're right in the mix of where we've been the last couple years. We can see the big jump here after the pandemic, the amount of money that was flushed into the system, interest rates going to zero. This raised the prices into a new bracket, into a new category. We got far too carried away in 2022. Now we're coming back to where we were between 2021, 2023 type numbers. So I think we're going to hover in there until we get a direction of where to go when we find out what's going to happen with the tariffs. Months of inventory, we're up there almost at the highest. We should pass this previous high, which is closer to the 4 months of inventory. We're at 3.61 now. I do expect this to rotate to the high side in the next 2 months, so we'll keep an eye on that.